Hey, what's going on, guys? How you doing today? Beautiful day in Pensacola, and awesome day for the company. We are closing on a 61 space RV park today in Pensacola, Florida. I'm actually on the way to meet one of my partners, Jeremy, with Climb Capital over at the property to go over the game plan post-closing. We've got some work to do. We've got some improvements to make to the park, and then eventually we have a expansion development project that we're going to work on. I released a video last week that had a quick drive-through of the park property and kind of the surrounding area. That was kind of mixed in and at the tail end of a video on a couple other things. But this is going to be purely dedicated to that. So in this video, you're going to see the park itself. You're going to meet my partners Bob and Jeremy from Climb Capital. We work together on this park to close it out. And I'm also a big investor in the property. So this isn't just, hey, I'm a manager of the park. Like, I'm actually an investor. So I'll get returns, based off of the equity that I put into, or excuse me, the capital that I put into this property. So it's kind of cool because it gives me even more motivation to make this thing work and to make it an awesome property, because obviously I want my money to do really well, just like everybody else does. So got some other investors that we've worked with in the past, as well as a new investor that brought quite a bit of money to this deal to allow it to close. So we're pretty excited about that. Also, you're going to see an interview with Bob and Jeremy, where we talk about how they found the deal, how they negotiated the deal, some of the hurdles they had to overcome, the time that they worked this lead. It was actually pretty extended. And also, I was working this one on my own side as well, so it was kind of funny, kind of ironic that we were both working the deal. One of us locked it up, but at the end we were all involved in it together, which is pretty neat. So real estate's really cool. It's a super small world, and we're really excited about this one. In later videos, you're going to see us doing the different phases. So the first phase is, I'll let Bob and Jeremy do most of the talking on this and kind of their game plan. But in general, the first thing is to make it better than what it is right now. Take the current park and make it better. Then down the road, we'll go ahead and build up more units, maybe some different types of units and more amenities. And then we will pull our money out, and then we will do what's called a cost segregation study and get a big bonus depreciation on our taxes so we can write those off, and then that money we pull out from the refinance will all be tax-free. So we'll have the benefit of that depreciation on the tax side, plus a big bump, a big check to the investors and the owners in the form of the refinance, and that's all tax-free. So they'll actually be able to roll those taxes over into other income that they've earned throughout the year. So that's the gist, and then we got to determine at that point, do we continue to hold it and cash flow it, or do we go ahead and sell it, take our profits, move it into a bigger, better property? So that's the decision that we'll have to make in a few years. I'll let Bob and Jeremy kind of talk about the specifics on that. The other cool thing is, I'm just going to throw this out there. So my partner and good friend Blake is, we own about 120 units currently, and with room for more units to be brought in up in Gary, Indiana. So we, a couple years ago, bought a property and turned it into 3 properties through the BRRRR process, which I've talked about in other videos, and you can check those out. And he actually is from that area. He's actually up there, and we had to fire our management team because they sucked, and we're doing a terrible job and actually hurting the property instead of making it better. So Blake went ahead and created a property management company that he is going to own, operate, and maintain, and he's going to use that to manage our current asset, our current portfolio up in the Gary, Indiana area. And what I think is really cool, one, that he's doing a really good job, but two, is that he's actually going to be living inside of one of the homes in our first park that we bought up there. So pretty neat. I think it's going to be really, really entertaining and fun. And you guys who know Blake know he's kind of a boisterous guy. He's got a pretty good life story. He's an Air Force Reserve officer. He used to be a Navy guy, going into working for the airline, so he's got a lot going on. But he's going to be up there. I'm going to put his videos on my page as well, and then he'll obviously have his own stuff. But we're going to kind of document that process, and we're pretty excited about that. I think that'll be kind of fun. On Blake, what I wanted to bring up though, in addition to the living in the park and doing the management stuff, is he negotiated a really killer deal we had up there, and we're closing on that today. And it's not a new acquisition per se, but he's actually closing on an easement that we needed from our second park, because it actually had, and we knew about this before closing, but it had a couple units that were over the property line into somebody else's property. Well, we knew that we could move those. We knew it was going to be expensive, but what he did, he was able to find the sellers, or excuse me, the owners of that piece of property that we were encroaching on, and negotiate terms to allow an easement for our company to keep our homes there for a fraction of the amount that it would have cost us to move, plus a fraction of the time. We're going to get a refinance done immediately after this that we've already worked out terms with another bank, and then we're going to close on that. We're going to pay off a bridge loan that we have currently on that park that's at a very high interest rate, and then we're going to be able to up the returns for our investors based off of the distribution, or the cash out, and then based off of the earnings of the property, because we'll be using some of those funds to rehab the park, increase the units, increase the price per unit at the parks, and then it's gonna be good. So anyway, we're really excited about that. I'm gonna be to the park in a few minutes here, and we'll see you guys over there. Take care. Here we go. Here.
All right, so this is Leisure Lakes, 60 unit RV park. It's got a house, double wide on it right now. It also has room to expand on the back. Rates are continuing to move up, right? It's hard to get spaces. I would say this property right now has not been managed the best way possible. So lots of demand, but still lots of room for improvement. We're going to come here. We'll move the mobile home park out, or the mobile home itself out, to add more spaces here. Clean up the rule enforcement, clean up some of the basic maintenance and management here, and then start putting together a plan to expand on the back 14 acres.
This is Ashley. She's going to be the manager of the park. She already manages a couple properties for Climb Capital. One of them is actually right by Pine Village, which is the first park I was involved in.
I'm just gonna do a little quick flyover before we leave.
That's cool.
So I might use it, you know?
So once this is out, I think there's probably space for 4 more pads here. Have to, of course, put in electrical, run the plumbing for it, sewer and water. But we already got a park over here, so maybe consider moving off this trailer right here so you have a little bit more open of the amenity spaces. Move the trailers back over here. Should be a better look and feel, and then clean up the roads.
I was going to ask about the park. Was there a plan to potentially relocate where you could put like 3 or 4 spots here and then have it almost in the back on the expansion, like when we do the expansion?
I would argue no, right? I think if you put any, I think if you open it up a little bit, right, you got perception value. It's probably higher than your actual potential space rents. You take that away, you lose basically your only kind of look amenity, right?
Yeah.
You do have the water on the backside, but for people that are not on that backside, there's no water.
Yeah.
Now come back here. So a little bit tight back here. And we've already got some spots behind it, but I think we're going to be able to find a way to make some pull-throughs in a way that makes sense.
Yeah, pull-throughs makes sense.
Central power here, of course. Wi-Fi is also included in this park already, so it's not very great service, but it exists. So.
Okay.
There's a couple open spots.
Yeah.
Yeah, so what is the occupancy? Do you know? I mean, it's pretty much all long term, right? Right now?
Yes, all long term right now, and occupancy is high. I don't know if that's
Yeah.
90s.
Yeah, it's obviously pretty high. It's pretty packed in here. So.
You're 100% most of the time.
Yeah.
Typically a ton of space. But you can see too, they had a porch on this. So we'll get a mobile home, which is double wide, so it's a little bit tough to fit into our parks, but we can't get mobile homes right now. I mean, they're 12 to 16 months out.
Yep.
Prices are up like 20 or 30%. Most of the manufacturers won't even return my phone call. So
Nope.
there's a bunch of value in that, even if it's not in great shape.
Yeah. They're expensive to move though, those double wides.
Yeah, you can move twice.
Yep. The cracking it and then putting it back together part, we got quoted at like 30 grand for one up in Gary.
You're now a management guy too. You guys fired your management company?
We did fired them, and Blake's actually up there. He's basically a full-time reservist now.
Yeah.
So he's transitioned over to the airlines, and he's actually going to be living in one of the homes in Hillcrest. So I mean, you know, figure he's going to be an airline pilot. He's not going to be home all that much, and so, but it'll be interesting. So he's pretty excited about it.
So here's the lake, Leisure Lakes. So interesting in here, you have an easement to go all the way around this lake. But we don't actually own the dam side. So if there'd ever be a dam break, that's actually the state's problem, not our problem, which is cool. But we still have access. So what we think we want to do here is kind of create this into like a walking path. Maybe make some little stops with like benches.
Okay.
So we can actually make this an amenity.
So it ends there. I thought it actually went to the tree line. So it actually, the property line ends at that
Yeah, the
dam.
property, no, it ends before that actually.
Oh, really? So
yeah, so you can see there's a dam over there. So it ends before the dam. So if there'd ever be a break, right, that's not our problem.
Okay.
That's a state problem, which is nice.
gotcha.
I don't know what people driving down here.
Yeah.
But yeah, so I think, and the other thing I think opportunity potentially would be paddle boats, canoes, some kind of just basic rental. Right now we have 60 units. We'd like to turn at least 20, 15 to 20 into shorter term stays.
Yeah.
So we'll probably figure out exactly after we kind of get a week or two here what makes the most sense there, and then kind of finish that. Hey, these are going to be a little bit nicer, so on and so forth. These are short term stays. Move people out to other parks if necessary. Looks like we got a dock over there actually.
Yep, we do. Yeah.
That's sure that is, but
Well, that dock isn't, but the location potentially.
potentially.
Yeah.
I got another one.
The landscaping.
Something over there.
There's definitely fish in here. I
Yeah,
see.
so a lot of
see a
this is just
couple.
fill, right? So when there's built fish,
Shallow.
roads, and that's these dry stores right here. We are waiting still on getting a river for who owns all this crap.
Okay.
We likely will keep it. We'll let them stay here for a little bit, but at some point we're probably going to clean it out because we would like to make this either into another extension, probably another 40 spaces they already have engineered plans for from a couple years ago, or we think the other opportunity would be actually to build covered storage with electrical hookups back here and have this just be a storage yard on 9 Mile. The question is the road. So we got some things to think through here, but there's wetlands issues here. I think actually some of the stuff right here where the people are parked is part of the wetlands survey. But we're pretty high and dry back this direction. And then there is a property that Navy Federal owns behind us that I want to say is like 40 or 80 acres that has been on and off for sale. They're currently not looking to move, but have before. That if we could somehow get access, there would be an easement potential behind the Publix. So we have another entrance back here.
Womp womp.
I mean, but this is a great example to me of like a space that doesn't take a ton of time or effort. A power washing,
Right.
maybe some paint.
Is it Just like a unisex one, like one at a time type of thing, or what?
I don't know if we've been inside.
Usually you see like a
2 doors.
male female side, yeah. Doesn't look very big, so.
No, it's not.
Split up in there. There's
Gotcha.
2 laundry machines in there. So.
Interesting.
You put up a nicer sign, power wash it, do some stuff out front, you can clean up your rusted stuff. Power wash or no power wash this, you got a nice. Here's my thought process. Tell me if I'm crazy. My expectation would be this row right here would probably be best for short term.
Yeah, this row along the water should definitely be the short term.
Are they going to pull through though?
Well, they could
Yeah,
be.
they could be. Yes.
I would start with those.
That is nice, you're right.
Well, the other thing is if you get rid of some ugly stuff.
Yeah. What about some type of like noise, like a fence or something up there in front? Not even bother? Yeah.
I mean,
I haven't dabbled much in the more, you know,
I think
vacation
sitting
stuff.
right here, right? Like one, there's not a ton of traffic, so
right.
part of it. But I mean, it doesn't feel
No.
too crazy.
I guess the units themselves are kind of doing that, so.
Yeah, I mean, you put some more crushed rock here, put some millings. You got barbecues and you got tables back there. You can do a little bit cleanup.
Yeah.
A little landscaping cleanup. You're overlooking some water. You're what, 3 minutes off of Interstate 10.
Oh yeah, easy.
You're a half mile from Publix. Like,
Yep. What do we got here? Huh. All right. Oh, dude, this is cool. I'm gonna go first. That's awesome.
so needs some love in here, but structurally it's relatively sound.
Yeah.
Clearly needs a male solution.
Yeah, this isn't bad in here. I mean, that's a pool table here, so
I think we own machines.
yeah. It's, you know, paint, trim up on the top there, floors. I mean, just repaint them.
This has flooded before.
Oh, I just mean paint, like the trim up there,
Yeah.
get rid of that. You know, you can get those Wi-Fi cameras, you know, for security type stuff. Those are easy. But yeah, when you buy something that's already making 40K a month, that's not bad.
Yeah,
There's nothing here that's like
right.
that difficult to fix.
They're
It's
not
just
expecting anything. I mean,
right.
Yeah, and it's only what, like 15 of them are actually at the market rates right now. Yeah, so, and that's 150, 200 a month right there, times even, you know, 40. Pretty good.
Yeah, I mean,
Got a car coming in.
you could be touching 50 grand a month here if just everybody paid their bills and you move
Yep.
out the mobile home.
Yeah.
So I think that'd be a good deal.
All right, guys, we're back in Bob and Jeremy's office. Jeremy's out doing some other things for the some other properties they got going on. Bob and Jeremy are the owners of Climb Capital. They've got what do you got? Like over 800 units now.
727.
727. Does that include today?
No.
Okay, so coming up on 800. They actually were a little higher, right? And then you kind of have done some. They were selling a lot of stuff. So it's a constant, you know, back and forth thing. So, but anyway, they are the ones who they're the sponsors for this deal that we just closed here in Pensacola, Leisure Lakes. You guys saw the video of me and Jeremy over at the doing the walkthrough at the property, and Ashley is the manager's name, right?
Correct,
Yeah.
yep.
So she seems like she'll be pretty good
Yep,
over
she's
there. Yeah, she manages a couple other things for Bob and Jeremy right now. So anyway, I just wanted to have Bob kind of talk about how they found this one, you know, some of the underwriting, anything that was weird in there, how they funded it, and then kind of what the general game plan is for the next, you know, couple, you know, short term, midterm, and long term for the deal. So
Sure. So this is a property kind of very similar to Jake that I've been looking at for many years. both from the air and from the ground. So I can remember being as a flight school student, 2009, I was flying helicopters, and we'd fly over it at, it was Site 10, right?
Site 8.
Site 8.
Site 8, yeah.
Okay, so it's called Site 8. And I remember flying over there looking down, and that time I really wasn't into real estate too much, but thinking, yeah, that's a cool little RV park. And in 2015, Jeremy and I bought our first mobile home park, which is actually just down the street from this one on the same road on 9 Mile. And that was right about the time that Naval Federal Credit Union was relocating their headquarters to Pensacola. So since then, anyone in this area knows how big the Navy Fed campus itself has grown. So it's become a major thing. And so this park sits between Navy Fed and the smaller mobile home park that we have down the street. So love the area. Obviously, we're very familiar with it, know about it. The property came for sale about 2 years ago, was listed with a broker. We looked at it. They were asking about $4 million something. At that time, that was a bit of an absurd price. Probably today, not unreasonable, certainly high. But at that time, obviously, we passed on it. We went and looked at it again about a year ago, and the price had come down significantly. And we actually went under contract about $500,000 higher than where we ended up closing today, last week. So,
Okay, so I didn't actually know that part. So how did you guys work the? What was the process for working that down? Because I mean, $500K is a big amount, and especially on the backside when we sell it. So that's a really big part that I need people to understand is that you make everybody hears that cliche, you make your money when you buy it, right? So
Sure.
Right there, $500,000. So how did you guys do that?
yeah, well, we waited, and so that was a little less than a year ago. We had it under contract. You want me to do numbers?
Yeah, absolutely.
Okay, so we had it actually under contract.
Unless they're proprietary.
For 2.75, right? And that's where we had under contract for. We did our due diligence. We, physical stuff, but we just financially couldn't make the underwriting make sense, and so we backed out. We pulled out of the contract and said, sorry, appreciate it, but this is not financially a smart decision for us right now. It doesn't meet our underwriting criteria, so we walked away. The sellers switched brokers again, now to the third broker. I think it was the third broker from my tracking anyways. Interesting side story, the broker that closed the deal with us, who has the present day listing, we bought a mobile home park off of him in January of this year.
Okay.
So he was part owner of that and the broker on that. So also a retired Navy guy, so small town. And so we had a reputation with obviously getting the deal closed, etc. And so when I switched to that broker, Pete, went back and looked at it. Pete, as a owner, had some good business sense, and so he basically told the coach owners of, hey, if you guys really want this price, you need to start increasing your rents.
Right.
And it doesn't have to get all the way there, but you need to at least prove the idea that you can get your new rent premiums. And so he did that. And right about the same time, we circled back whatever it was, Pete, I'm not sure exactly, circled back to the idea of, hey, we should probably check on this property again and see where we're at. So called him up, talked to him. He said, hey, we've got 8 of the pads now at this new rental rate. Like, okay, now which was about a $200, $150 rent increase per year.
And that's per lot, right? Or are you talking about $150K in value?
$150 on the lot per month,
right?
Per lot.
Per what was it, about 10? You said something like that. 8
yeah,
or 10?
I think we first looked at it. They had 8 at the new rate.
Oh, and then they over time. So so 8 times 150, right? That's a pretty decent amount. And then when you talk, the nice thing about commercial is when you talk about a cap rate and you divide by that cap rate. You guys bought it at like 8.2, 8.3 here,
right? And
this is easily at least a 7.5, maybe even a little bit less than a 7.5,
right?
That area.
Yeah, so good point. But from the time we put it on our contract to today closing, we now have another 10 more pads with that rent premium, and so we were buying at a good cap rate of 8.3 or close to there.
Yeah.
Market cap's probably 7, but we also know that we have another 45 units to then bump up. So our year one cap rate, I don't know, have to do the math later. We'll
Right,
follow
yeah.
on. But needless to say is we needed the proof that we could get that new rent premium.
Right.
And once we saw that, hey, about 10% of the park is willing to pay this new premium, I do care. It would be nice to buy it as is, fully rented at the high market price, but the proof is in the pudding. We know that we can raise the rents, and so we went ahead and there. So our offer was a little interesting. The original offer was two parts. One was if we were to buy it in 30 days cash, we would we offered them 2.25 million.
Okay.
I don't know if you know that part either.
No, I don't.
Okay.
I a little bit about this too. I had been talking with this seller a couple years ago, about 18 months ago, and then my partner Tyler, who's actually an investor in this deal, had it as a lead, an inbound lead from our website, and so we called them, and I had actually talked to one of them, and we were about 2.15 is where we were at, and we had kind of a verbal agreement over the phone, and then they ghosted us, so now we know why.
My bad.
No, it's all right. It's good.
So at the time, we were buying and selling some things. We also had a couple partners that had a significant amount of liquidity, and so we kind of thought, well, let's see what kind of discount we could really get. And obviously a cash offer, quick close, is much more agreeable and more enticing to the seller. So we made that offer, but we also made two offers. So we made that offer, and we also said, hey, if we go the traditional 45-day due diligence, 30-day close with financing, we'll give you 2.35. And they countered. We went back and forth, and we said, well, why not just put it into one offer and just make it timeline based?
Yeah.
And so the offer that we agreed upon was 2.25 if we got it closed in 30 days. If it went past that, then the price went to 2.35, right? So lost $100,000 there for going the financing route. But we ended up going the financing route, got some really nice terms with a lender that had already lent to us in a property we have in Cincinnati, another RV park. They actually are based out of the Northeast up in Ohio, and they were they're trying to get into this market, so they came down here and gave us this loan down here to get it. So
Okay. And we're at what? What's the terms on this one?
it is a 5-year fixed at 4.5% interest, and then floating 350 basis above the LIBOR for the next 5 years after that. So it's a 10-year term.
Yeah.
25-year amortization. We did push them to 25 years amortization.
Yep.
And they're giving us 80% LTV. I'm looking at Carter.
Yeah, it's 80. Yeah, it's 80.
A few too many numbers in my head.
Which is good. So a couple of advantages, at least one right off the bat with the longer amortization. This one didn't have an interest only, right? That was that's the other one that we're talking about. So
Yep.
they got another one under contract. So if you're looking to invest in a really good property, hit us up and we'll put you in touch with that one. So I think it's going to be just as good as the one that we closed in today. So that'd be a really good one. It's near Huntsville, so it's a bombing area. So
It's got a little bit of growth up there.
Little bit. Things are happening, but the longer amortization increases the cash flow during the hold years, which there will be like the value add play in the raising the rents and and then over time we'll pay down the principal and there'll be some appreciation. But this one was purchased more as a cash flow play, and again, not that we can't take advantage of all of them, but it's going to be a big cash flow play, so that helps a lot. The 5-year am schedule. So anyway, so I think that pretty much covers the underwriting stuff like that. It was pretty straightforward after that. There wasn't any big hiccups or sellers dying at the last minute.
Again,
which is. So talk about irony. So talk a little about that, how that relates to this story.
One of our very first purchases that Jeremy and I tried to make that was for us at the time a larger mobile home park was another mobile home park here in Pensacola, and we got down to basically a couple days before closing, and unfortunately the owner passed away a couple days before closing, and then the property got put into probate, and at the end of the day we had to suck it up and walk away with a pretty significant loss on our legal fees and whatnot. The property essentially was not sellable, so we had to walk away. Same, circling back to this property, It was actually the same family that owned Leisure Lakes, and then we got to buy this deal. So, again,
it's kind of funny.
Yeah,
how it comes around full circle.
Full circle. I think that did help us in the idea of we had a relationship with the family as well, and they did know that we were local and had done other deals here, and so they were more inclined to go with us versus other offers.
And that's why I brought that up, because it does help it to be local, have a presence. Doesn't mean it's the only way or whatever, but I'm looking at my watch because we got a closing here in a few minutes. So, but anyway, so now let's talk about the game plan. Basically, we're closing here in about 10 minutes, and then we're gonna go for the next kind of couple years. Let's just really quick.
Sure.
Jeremy talked about it a little bit, but
relatively simple. First, step one, take the rents from 600, 650 to the 800 across the board there. That will do a couple things. Obviously, it increases our income. Doesn't really have a significant impact on our expenses, so that's more or less straight to the bottom line on the NOI. It will drive out some of the tenants that we currently have, and that's okay. Then we will convert some of the long-term spaces that are used basically as a monthly rate right now. We'll start converting those back to a nightly or weekly rate. Generally, we get about 3 times the revenue. 3 times the revenue that we would get for the monthly rate. So we're expecting somewhere around $2,000 a month for revenue from a nightly overnight type stuff. And so that's what we call phase one. It's just basically a management and a pro forma turnaround. And then the second part of that is we have usable space in the back, which will either be developed into another 40 pads, or we're contemplating the idea of covered storage for RVs, so covered powered storage, boat storage, etc., and just doing kind of the mini storage model in the back. There's some ancillary brainstorming ideas that we like, maybe some floating cabins and some paddleboard rental and all that type of nice stuff, but it's relatively simple. Raise the rents, add spaces.
Yep, and then we would use a construction loan to do that build out. It would probably be in the realm of about $1 million, probably plus or minus for that. So we would use the equity that we'll build both in just by purchasing it under value and then increasing the rents and increasing the value of the park, go to the bank, get a construction loan. And then after that, if everything's stabilized, then we would do another refinance, and that would probably be the year after we build everything up to do the cost seg study so that we can get that big bump in bonus depreciation, assuming that's still a thing.
We need to come up with like the BRRRR acronym.
The BRRRR, yeah. The BRRRR. You can do it on commercial just like you can do it on a residential. Takes a little bit more. It's a little bit more in depth. A little bit bigger of a process, a little bit bigger numbers, but that's all it is. Just a couple more zeros, so it can be done. Anyway, so all right. Well, thanks, Bob. I know we got to get to the closing here, so congrats and
thanks, man.
If you guys got any other questions, you got any questions for Bob or myself, drop it below. We're gonna be following. I'm gonna kind of follow the progress of this over the next couple months and years, and then we'll have some more deals coming to you. So. These guys, raise money for a living. That's what I do as well to fund these deals. So we look for guys like for you to join us on these awesome opportunities. So anyway, till next time, here's to your wealth. All right. Hello. Good. How you doing? We're here for the Leisure Lakes closing. All right, here's the closing table. Cool.
All right, guys, just came from closing on the property here in Pensacola. $2.35 million purchase. Got just over 9,000 back at closing, which isn't a huge amount in the grand scheme of things, but it was more than we thought we were gonna have to pay, so it was a nice little check. Making money day one. We got some really great B-roll footage. Met a great guy named Alex, who is doing a lot of branding and marketing for Climb Capital for Bob and Jeremy's company. He's also a friend and a fellow investor, does multifamily. He's in a couple other masterminds and stuff with those guys. So pretty cool dude, and I'm really excited to see what he puts out. I saw a couple of his other works, and they are insanely better than what I put out. So I got my work cut out for me if I'm ever going to be up at his level. So pretty impressive stuff. Anyway, if you got any questions on any of these properties, how we went about finding them, financing them, and getting them closed, any of the issues, as well as if you're looking for opportunities to invest. I put $250,000 in this deal. We put our money where our mouth is, right? We are willing to put a lot of our own money into all these because we truly believe in them. This isn't just, hey, let me go raise money from all these poor schmucks and then let's go. No, like these are properties that not only are we investing in, but we're signing on the mortgages and saying on the notes and saying, hey, I'm taking responsibility for millions of dollars of debt that you can come after me personally if I screw this up. That's how much we believe in these things, right? It's a lot of personal risk and responsibility that we take on these. So we don't take anything that we do lightly at all. So when I talk to you about, hey, this is a great opportunity, I think it's really something that'd be awesome to have you on board with, it's because I truly believe in it, right? So if that's something you're interested in, if you're looking at getting into real estate or getting into more real estate or into bigger deals, we got a lot of other opportunities, right? Due to SEC regulations and things like that, I can't go marketing specific properties. I'm just saying that's one that we have. We have a lot of other deals in the pipeline, so definitely reach out. If we got the ones that we have right now don't suit your fancy, we can talk to you about deals down the road. Climb Capital alone has done over 15 deals this year on sales and acquisitions. So, and we've got a couple more deals that we're working. My partner Blake and I, Tyler and I have done a couple deals this year on the commercial side. So we definitely got a lot of things, a lot of opportunities to put your money to work, both long-term and short-term. So if that's something you guys are interested in, please reach out. Otherwise, I really appreciate you guys watching these videos. I'm really excited about this project. Looking to put out a bunch more as we go along this process, and it should be a really good time. Like I said, hit that subscribe button, come back and check us out. I'm going to be doing more content about how to do certain deals. We got I just funded this deal with a whole life policy line of credit that I used. I'm going to interview my insurance agent, Tom Lonnie, who's just absolutely phenomenal, him and his team, and works with a lot of heavy hitters in the industry to use high cash value whole life policies to fund real estate and to grow massive generational wealth for you in your working or in your living years while you're alive, and then also be able to pass that on to your heirs when you do die, because that is inevitable, right? Death and taxes. So anyway, that's going to be coming up soon. I'm going to hit him up. We just wrapped up that process yesterday, so now that we got all the details and how everything worked, I'm going to break everything down. I'm going to get my notes and get the exact numbers, and then we'll get a little phone call, and we'll have a pretty good product to push out to you. So look forward to that one, right? Really appreciate you guys being here. Had a blast doing this one. Until next time, here's to your wealth.